Hello everyone and welcome to Insider Financial Talk Stocks. My name is Alex Carlson. I will be your host today. I'm the editor-in-chief of InsiderFinancial.com, and in this video we will recap last week's market action and discuss our game plan for tomorrow. But first up, to get our market moving reports on top small caps, click that link in the description or go to signup.insiderfinancial.com or sign up with your email on any of the pop-ups on InsiderFinancial.com. After you sign up with your email, you can then sign up with your mobile number. Mobile is the fastest way to get all of our reports, and it works for all numbers worldwide. Simply enter your country code first, followed by your number. For US and Canada, 1 plus area code and number. Never begin the format with 0, it will not work. And after you sign up, you will get a welcome email, which includes a free copy of the Insider Financial Guide to Penny Stocks ebook. Our ebook, our email service, and our text messaging service are all free services from InsiderFinancial.com. We do not run any paid subscription service whatsoever, no Discord rooms or Telegram chat groups. Well, guys, the S&P 500 on Friday retreated 2.93% for the week, posting losses in 4 out of 5 sessions. The benchmark index notched its worst weekly performance since early March, while also slumping to a 3-week losing streak. The main catalyst behind the decline was the Fed's indication that interest rates will be higher for longer. The central bank was the main event of last week. The Fed's Monetary Policy Committee meeting on Wednesday chose to keep rates steady as widely anticipated. However, the latest dot plot, a summary of economic and rate projections, signaled one more rate hike this year along with fewer rate cuts in 2024. Moreover, Powell at the post-decision conference said that a soft landing was not a baseline expectation, which further shook investor confidence. The Fed chair also highlighted that economic activity had been stronger than all expectations. In reaction to the Fed, markets slumped on Wednesday and extended that decline on Thursday. In the latter trading session, the S&P 500 at one point hit its most oversold level of the year. Also weighing on equities was a surge in Treasury yields as traders sold off bonds on the Fed's higher for longer signal. For last week, the shorter end 2-year yield, which is more sensitive to interest rate decisions, scaled a level not seen since 2006, while the longer end 10-year yield hit its highest level since 2008. Aside from the Fed, the week also saw other notable highlights. WTI crude oil futures snapped a 3-week advance, helped in part due to the recent larger than anticipated OPEC Plus production cuts. Rising energy prices have added to inflationary concerns. Stocks of the so-called Detroit 3 car makers, GM, Ford, and Stellantis, garnered significant attention amid the first full week of the UAW strike. There were some signs of headway on Friday, with the union saying they had made significant progress in their talks with Ford, while calling for strikes at 38 GM and Stellantis locations. The IPO market grabbed some of the spotlight last week following British chip designer ARM's holding strong market debut. Grocery delivery app Instacart launched on the Nasdaq to similar enthusiasm. However, in the past few days, both ARM and Instacart saw declines while also breaking below their IPO prices. Merger and acquisitions activity saw a major bump last week, especially in the tech space. Cisco on Thursday announced a $28 billion deal to buy cybersecurity firm Splunk, a move that Wedbush Securities believes could usher in a tidal wave of mergers. Meanwhile, the UK on Friday issued a preliminary approval for Microsoft's planned $69 billion takeover of video game publisher Activision Blizzard. For this week, starting on Monday, short interest levels are elevated again on Novavax and Wayfair. Options trading volume is higher than normal on Tilray and Wellmata Therapeutics. Notable companies due to report include Thor Industries. On Tuesday, we get earnings reports from Costco, Cintas, and United Natural Foods. On Wednesday, we get earnings reports from Micron, Paychex, and Jefferies Financial Group. On Thursday, Accenture, ACN, Nike, CarMax, and Jabil. Options trading implies a double-digit swing in BlackBerry when it reports. Nike will hold its earnings conference call at 5 p.m. It will be closely watched. Trading on Nike reflects the earnings jitters of investors and analysts in terms of the strength and health of the retail sector. Shares of Nike are down 9% over the past 6 weeks versus negative return of 5% for the retail sector as a whole. Options trading applies a 6% move for Nike after the earnings update. Nike fell 2.7% after its last earnings report. The three stocks that have correlated with Nike on earnings day, the highest over the last year, are Foot Locker, Dick's Sporting Goods, and Skechers. On Friday, we get earnings reports from Carnival. Also, Macau casino stocks will be on watch just ahead of the beginning of the high-traffic Golden Week holiday period and weekend release of the gross gaming revenue report for September. We're also going to get news on Tesla. It will be in the spotlight on the last business day of the quarter as analysts churn out their Q2 delivery estimates. The consensus estimate currently stands at 463,000 deliveries for the quarter. And again, with this being the last week of the quarter, we could get some positions squaring ahead of that event. So let's see. We're expecting volatility. That's the bottom line, and need to see how the market reacts to this volatility. In terms of small caps, as I said last week, penny pumps are where the action is, but these are just day trades. They're one and done. Tonight, I have no new small caps or penny stocks on my watch list. I am just not liking the small cap penny market right now. That's why there were no alerts last week. I'm not a financial advisor, but right now cash is a great position with a lot of this uncertainty. And if you see anything worthwhile, it's just singles and doubles. Get in, get out, make that money, move on to the next play. But for tomorrow, and like we do every day for our subscribers, we will be screening pre-market. If we see anything worthwhile, we will send out an email and text to subscribers. That's why it's so important, guys. Sign up. It's completely free. No spam. Your info never shared. Unsubscribe anytime. And what we do here at InsiderFinancial.com is put stocks on your radar that have the potential for outsized moves. As I have repeatedly stated, there are always opportunities each day in the markets. The important thing is identifying which stocks to be in to grab that money. The key is trading green, not red. We are looking for those momentum plays that have catalysts. It's all about finding the momentum before it happens and riding that wave. That's what we're doing here at InsiderFinancial.com. Unfortunately, there's no momentum right now, so that's why we are on the sidelines. But to get our small cap reports, we cover low float, short squeezes, recent IPOs, biotech FDA plays, AI stocks, EV stocks, lithium stocks. Click that link in the description or go to signup.insiderfinancial.com or sign up on any of the pop-ups on insiderfinancial.com. No spam. Your info is never shared. Unsubscribe anytime. You can even sign up just to see the level of research we do here at insiderfinancial.com and unsubscribe. Finally, Insider Financial and I are not investment advisors. This video does not provide investment advice. Always do your research, make your own investment decisions, or consult with your nearest financial advisor. This video is not a solicitation or recommendation by seller hold securities. This video is our opinion, is meant for informational and educational purposes only, and does not provide investment advice. Past performance is not indicative of future performance. Thanks for watching. Remember to smash that like button, hit the notification bell to be notified when a new video is uploaded. Have a great week, traders. Bye-bye.